Hi, it's Christopher Wright, Financial Counsel Specialist, and let's talk today. So we all know and we all understand the banks, big banks got a bailout. Okay, Wall Street got a bailout. But let me ask you, what about the average Joe, your everyday guy or woman where's his bailout? Who's going to help him or her? And I tell you this, don't hold your breath. If you're looking for Uncle Sam to come in on a white knight, as a white knight on a horse to save you, don't hold your breath. I don't think any of us can hold our breath that long anyway. If anything is going to change, it'll have to come from ourselves, from you and from me. But there is a solution, and it's called legal credit manipulation. But first, let's talk about the consequences of having bad credit. You know, sometimes bad credit can be like a bad movie. It can affect you in many different ways. You pay higher interest rates. Higher interest rates mean higher payments, which means you have less money to keep for your savings and for yourself. You'll find that a lot of your credit applications are being declined because you have a lower score. Financial institutions consider you to be more of a higher risk. Therefore, your applications are probably going to be declined. You're going to find it hard to find a place to live. Even your apartment do credit checks. That's one of the few ways that they can tell, trying to determine if that person is trustworthy or not. If you're applying for a home mortgage, your broker is going to pull your credit report also. Your mortgage broker. Assuming you do get the apartment, if you don't have good credit, you'll probably have to put down a larger deposit on your utilities. So it affects you in many ways. Cell phone companies. The only cell phone you may be able to get is this one here. It's like one of the original ones, like a old armory phone. You have to have good credit in today's world. You're going to find it hard to manage without it. And employment. This is a biggie. A lot of people don't realize, but depending on what industry you go into, especially industries where you are managing or handling other people's money, then your credit has a lot to do with your employment. You can be denied because of that. And matter of fact, in a job you apply for that pays $75,000 or more per year, your potential employer can pull your credit report then also. And your insurance policies. Any credit transactions that is worth $150,000 or more, your credit institutions can pull your credit report. And that means even if it's just for a regular life insurance policy, if it's worth $150,000 or more, then they have the right to pull your insurance policy. Cars. Gonna find it hard to get a car. The only thing you may be able to get is this jalopy here. You know, it's with something like Fred Flintstone. You have to pick up and carry, because you're gonna find it hard to get a decent car with bad credit. And if you do get it, the payments will be so outrageous you'll probably be paying twice than what you should. And business. You may have a strong desire to open up your own business. Well, without credit, you're going to find it impossible, or at least highly improbable, that you're going to be able to get adequate financing to open up your business. You may be able to bootleg it, you know, but to do it and to do it right, you need financing. To get financing, you generally need good credit. And all of this means missed opportunities. So much to do, so little time. But guess what? You are in the right place at the right time, right here, right now. As I said, there is hope, and your hope comes from your peace of mind and the security that you have when you know that when the next financial crisis arises, and notice I said when, not if, but when it comes up, you have the knowledge to handle it and to properly deal with it. That gives you so much peace of mind for you and your family. And how do you gain that peace of mind? Through knowledge. And the knowledge is right here, right now, before you. It's up to you to take the action. What will you learn? What do you need to learn about your credit score? Well, there are 5 factors that determine your credit score. And there are many ways of legally manipulating to your advantage. The first, of course, is your payment history. Your payment history accounts for 35% of your credit score, and it's the largest and the most important. If you're not able to pay your debt on time, then almost everything else is irrelevant, because you must be able to pay your current debt on time. But there are things you can do to improve your past payment history. There are ways of dealing with past bankruptcies, past repossessions, and judgments, especially those that have already been paid, but they're still on your report, so they're still affecting you. And there are legal ways, and I want to emphasize this, legal ways that they may be able to be removed. That's the most important. The second important is your debt ratios, and this accounts for 30% of your score, credit score computation. And this is very important because it shows how much you have used compared to how much debt you have available. It's better known as your debt utilization score also. And there are ways of improving this. Some of them may be contrary to what mainstream financial advisors tell you, but it can be done. The third thing is your account age, and this accounts for 15% of your credit score. And this is simply how long you've had credit, and good credit actually, and bad credit also, meaning someone who has had credit card that they paid on time for 3 years would be perceived as being a better risk than someone who has only had a card for 3 months. And I'll show you there are ways of adding years of good credit to your score, to your credit file, which in turn improve your score. 4 things are credit experience, and this accounts for 10% of your credit score. And this is simply how well have you handled the different types of credit. You know, your revolving accounts, like your credit cards, you know, installment loans, like auto loans. Have you had different types of credit? Someone who has a $50,000 mortgage and auto loan on their report would be perceived as a better risk than someone who only has $50,000 in credit cards. So your credit experience is the 4th thing, and it counts for 10% of your score. The 5th and final are your inquiries, and this counts for 10% of your score also. And this is simply when you apply for credit, and I should say there are hard pulls and soft pull. A hard inquiry is when you actually sit down, fill out a loan application or credit card application, and you submit it, and that institution pulls your credit score. That shows up. But if you just go online and pull your own credit score, then it's not doesn't affect your credit score. And there are ways of getting inquiries off. They don't last as long as your standard credit entries, so they are not as important, but every little thing counts. And as I said, there is hope. And this is not all. This is just the beginning.